Hello, everybody, and welcome to the RJO Futures Market Commentary for the week of March 2nd. My name is Toby Gennaro from Trade to Precision, and we'll be getting to the charts here momentarily, taking a look at what's happening in some key markets this week. Before we do that, let's take a look at the calendar for the upcoming month of March. We've got a couple of webinars coming up here. We're doing the Advanced Strategy Course Series, which is a three-part series over 3 weeks. That'll be done on March 11th, March 18th, and March 25th, all at noon Eastern Standard Time. And the advanced course, you just need to be signed up with RJO, have an open account with RJO Futures, and you're good to go. We'll teach you 2 new trade strategies to have in your bag to trade your favorite futures markets. And again, that's all compliments of RJO Futures. So without further ado, let's get to the charts here and see what's happening in some of these key markets. So let's start out here looking at the S&P 500 equity markets. On the monthly charts, had a close out from the last month of February right here out to a new high. That's very bullish. On the monthly time frame, got the new candle start up here for March. And then looking at the weekly chart, slightly a little different story here. I like to look for these very small bearish candles with a lot of extension from the moving averages, just like you see here, primarily at a new high and also within that higher trend line right there. As you can see, a lot of times when we get those candles at the top, it usually signifies a larger retracement back into the moving average zone, which could be something, back down into this level right around 2050. So provided we get a break of the low of this candle, and the low is sitting right at 2099.75. So pretty close to that right now. We've got some resistance right around that 2100 level. Got a lot of divergence here on the charts. As we move down to the lower time frames, the daily, we are back in and around that buy zone between the 10 and the 20 period moving average. And as you can see on the 8-hour time frame, a nice fib zone here from the most recent swing low to the recent swing high. Got some solid divergence here on the charts, but we're getting a pullback right back into that 2100 level. And all I'd really need to see here would be a nice small bullish candle in and around that 20 period average zone. Then I'd be looking for the break of the high to get along this chart back up to that 2117 level. If this level doesn't hold from around 2100, there's a zone right there all the way down to the 62% level, down around 2095. More than likely, that'll signify that we're getting a deeper pullback on the daily chart, which would be right back into this 2081 level, which would put us right around here at this level, deep back into the buy zone. On the daily chart, that would also put us back into more of a shallow pullback on the weekly chart as well, which more than likely would give us pretty decent bounce off that level. So overall, looking for a couple of different levels there. Still bullish on this market, just looking for a little longer pullback. Got some big news coming out this week, Monday, Wednesday. We've got the manufacturing, the ISM manufacturing news and the ISM non-manufacturing news. So those should be some big market movers on Monday and Wednesday. And we'll take a look at crude oil. It's been a big mover here in the last 5 or 6 months, as you can see here on the monthly chart. Pretty much just fell off a cliff. We've got all the moving averages in alignment, the 200, the 50, the 20, and the 10. A little bit of overextension there. Actually, a good portion of overextension there from the moving average zone, and came down here right around that 44.6 level if you've been tracking this market. And here's what that looked like on the weekly time frame. Very nice move to the downside. No rallies, back up into that 10-20 period moving average sell zone, except the rally that we just got recently. And all of a sudden, we got a nice bearish candle there right in and around that sell zone, and we got a break of the low, and really looking for the market to at least retest that that previous low, and that'll more than likely set up some bullish divergence across a couple of time frames, which should quite potentially give us a bounce off of that level, I would anticipate. But we do have some supply numbers coming out for crude oil this week on Wednesday, and it's going to be dictating which way the markets more than likely will break here. But for right now, looking at the daily chart, got a nice bearish candle in the sell zone right there, all the moving averages in alignment. If we get a break of the low at this level, which is right at, let me give you an exact number here, the low is 47.80. If we get a break of that level, more than likely, again, we'll be coming down to retest that 44 level. And so you can see all the moving averages in alignment on the 8-hour chart as well. We're in the sell zone there. We don't have really any bullish divergence right here on the charts. We do have some as we get down into the 240 and the 120, but for the most part, it looks like we've got some decent rejection candles there. If we get a break of the low of this candle right here, that would obviously send us back down to retest that level as well. So overall, pretty bearish looking charts there on crude oil, down around these levels at around 45. Most of the pros are saying it's doesn't really make a whole lot of sense to drill for more oil at that point. Some folks have the 30s as an estimate, but technically, as we're looking at the charts here, I'm just going by what the technical setups look like. They look fairly bearish, and I'm using the candle highs and lows to determine the next move in the price action. So depending on what we have fundamentally on the supply numbers, that's going to help either to the downside or provide some kind of a bounce going into the middle of this week. But overall, looking fairly bearish on crude oil for the upcoming week. And the last market we'll look here is on soybeans. A pretty deep pullback here on the monthly time frame, but basically right back into the buy zone. Got a nice bullish candle there about 5 months ago, and obviously from a higher time frame, it's going to take a while if we get a consolidation here, if we're going to get a break back up to the high. But right now we didn't really drop any lower. We got a nice bounce off of this level right here around 958. We're moving back up. Got a nice close of a bullish candle there again in that buy zone on the very highest time frame, the monthly. As we go down to the weekly, things are rolled over, as you can see a little bit, but we've got a nice consecutive move here of a number of weeks moving back up into this 1054 level, which I've been watching pretty closely for quite some time, and I'm really looking for a breakout of this level going higher back in the direction of the higher time frame trend, which is the monthly chart. Not absolutely positive that we're going to get it, but things are looking like they're finally ready to potentially make a move. If we start getting a move back up to this level at 1050, say 1054, right thereabouts, even as high as this level right around 1067 would be the ultimate break, then I'd be looking for probably a small candle consolidation here and then potentially a breakout to the upside. If we go down to some of the other time frames and see what they're telling us, obviously the lower time frames here, the daily on down, we've got the moving averages in alignment, the 50 sneaking in there. We'll have the 50, the 20, and the 10. Higher highs, higher lows. You can see the nice trend here on the 8-hour time frame, nice pullbacks into the moving average zone. Be looking for another pullback here on the 8-hour time frame and potentially get long into that 1057 level and then await that break at 1057. If we go down to some other time frames, you can see any pullbacks into that buy zone are going to be met with some buying pressure, moving the price back up to the high side, up toward that 1067 level. So overall, things are beginning to start to look like we might break that level here on soybeans. That remains to be seen, but things are looking pretty good so far. So I hope you guys enjoyed the technical analysis. Hope that helps. Trying to keep you on the right side of the market order flow, and we'll look forward to speaking to you next time. Take care.